Hey there, traders. This is Trader Tim from eMiniMind.com, and I'm here to help you improve your trading so that you can become financially free and live the lifestyle that you want. In this video, we're going to talk about a couple of strategies that you can use to capitalize on some of these bigger swings in the ES specifically without holding a futures contract overnight. And then we'll also get into a couple of the trade setups from today. So one thing that I will do, because I never hold an ES contract past the close, uh, what you can do is turn to like the SPY and you can draw up the daily retracements. So like at this point, we've had one setup up here after the bigger high to low 50%. So you can see that one drawn here, that's 50%, negative 23 down here, which we just traded at. But on the way down, we had one setup and then a second setup, and then kind of right around the third setup. But at this point, I wouldn't be necessarily overly confident in this 2803.75. I would go ahead and draw the full retracement. And if we do get some resistance, because it is a big round number, 2800, I would just wait for a little bit of confirmation before I would try shorting right there. Otherwise, if we get a bigger spike, I would look for a rally up to like 2830. And then basically all you're doing is turning to the SPY and then either using a put, an option contract, or just coming in here, drawing up the next retracement, then looking at the distance between the 50 and the 61.8, so you can place your stop above the 61.8. Um, what I like to do is just kind of round up a little bit. So in this case, you could use 284.50 as your stop, and then 282.90, we'll call it, for an entry, and just divide those two and take, it's about 2.5 bucks. And if you wanted to risk $100, let's say, then you divide 2.5 into 100 and get about 40 shares, and then that's the size of the position that would give you a risk of $100. You put that on as a swing trading position, and as we roll over, then you can scale out. You can trail your stop on the way down. You manage it the exact same way as you would an intraday trade, only you're on the larger time frame. And trading the underlying, at least you have a number of shares that you can then use and scale out. So that's one way to capitalize on these overnight trends when we're not seeing a ton of intraday trading. So in terms of today's trade, I wanted to talk specifically about three setups. So right off the bat in the morning, we started in this nice little uptrend, and we had a beautiful double top right at the top of the first 30-minute range. And that's a very nice opportunity to look for a short. But in this case, this morning, as I drew up the first trading hours only, low to high, well, we got the double top, and I liked the short if it would have triggered before we touched this 27.93. So if this bounced here and came up, and I had an order here to try and get in the short at that point, but it didn't get filled. And then we came down and tagged the long. Therefore, I passed on taking a short here because the long had already traded. So you have to go with whatever setup trades first. And even though I didn't have a blind limit order sitting here, so when we started to bounce, I was not in the long down here, but I had to pass on the short for the fact that the long did trade first. And then instead, what I did is just come over here and drew up the very first setup in the long direction, because that's the setup that's trading below us here. Once we broke the 61.8, which was right here, and just drawing from lows to highs, and took the long over here. So it's a little bit higher than the 50% of the larger halfway back. You're looking at a 93.50 versus a 95.50, but you have that confirmation that we did get some support. And that one traded up to its negative 23% target, went a little bit higher, and then rolled over. So that's how I use the opposing setup. In this case, the double top kind of starts to signal a short, but I use the opposing setup of the long to keep me out of a trade that ended up being a stop out. So as we move forward, this long did not make it to its bigger negative 23% target. And in doing so, so the way that I had it drawn up like this, and then I drew up, once we hit this negative 23% target, there was a little swing low here, and one candle swing low. I drew up the retracement like this, but we had a high tick up here at highs, if I recall. 34. No, it wasn't the high tick at highs. The high tick was right here. But so we broke above the first 30-minute range, but we couldn't sustain it. And so I had my stop underneath this little swing low here, even though it was one candle swing low. That was really the only pullback in this rally. So that's where I got stopped out. And then immediately after that, because we fell back down, I ended up taking the short here. You don't really get a candle, the change in the color of the candle, but you can see we did bounce. Let me zoom in a little better. So got out of the long on the break of the swing low, and whenever we break a swing low in an uptrend, now we got to shift gears and be looking for a short setup. And that's exactly what we got here at 97.25. And that one ended up trading nicely from the top of the first 30-minute range right down to the bottom of the first 30-minute range. This was that halfway back. I'll just get rid of that. A couple of nice little swing highs that allowed for trailing the stop above these swing highs. When we started selling off here, I got aggressive with kind of a third of the position, just trailing each candle's high. And then I let it roll over and just kept trailing these swing highs on the last bit, and then got stopped out right over here, about 87.50s. We did get a low tick down at lows, and as we bounced from highs to lows, we just about traded at the halfway back. And then the same scenario on the flip side, drawing up the opposing low to high, letting that break, excuse me, letting the long break at 61.8 down here. See how we came down and we pierced the 61.8, and then drawing the short setup that follows as a way to get into a short following the bigger short, basically the opposite of what just happened earlier, and then trying as best as possible to trail on the way down. Now in this case, I had drawn up the next retracement because there really wasn't a pullback here on the leg down, and so I just reverted right to the 61.8, and I ended up getting taken out of this one. Got the first target hit, the negative 23, and then I got taken out at about an 87.25 above the 61.8. So it didn't it didn't drop quite as much as the first one, but still a good setup occurring at the bottom of the first 30-minute range. So you can see how, taking trades at the top of the range, looking for a move to the bottom, and then when we pierce the bottom of the first 30-minute range, like see how this was such a deeper push down, whereas this guy just poked above and then fell right back into the first 30-minute range. This one dipped in, bounced, and then dipped in and broke lows. We pulled back to the halfway back short, broke the bottom of the first 30-minute range again, broke the opposing long setup, and then set up in a nice little short. So lots of opportunities um, for trades today, relative to what we've been seeing in the last couple of days. And I would definitely say this is one of my favorite setups, a short at the top of the first 30-minute range, just by simply waiting for a break of a swing low. And when we get that break, being quick to draw up the very next setup, the very first setup in the new trend. We're moving up in higher highs, higher lows, higher high, and all of a sudden, boom, we take out the swing low. You just got to be quick to draw up the very first setup in the new direction, which we were going up, so now looking for shorts going down. And having that occur at the top of the first 30-minute range is a great opportunity to ride, from the top of the range down to the bottom. And, in most cases, that's good for a 10-point move or so. And so I was pleased today to see better opportunities, pretty technical trading, good structure, and I'm hoping that this kind of trading environment continues. If it doesn't, then I'll be looking for these larger halfway backs on the dailies, kind of turning more to the swing trading aspect, and you know. I do swing trade individual stocks as well, but when the ES or the NQ is not producing a lot of intraday setups, that's one way you can trade the QQQs or the SPY in still capitalize on some of these moves. So, hope that was helpful, and I hope everyone has a great weekend.